So in his State of the Enterprise AI Stack, the first half 2026, my next guest wrote, enterprise enthusiasm for AI is high, but execution maturity is often lagging or inconsistent. Let's bring in now Hyperframe's research CEO, Stephen Dickens. And it's sort of what we kind of hear a lot of this, right? So for an investor, what does it mean? Does it mean be prepared for sort of false starts or lulls in the action, because that's what we're always looking at from an investor's point of view. What does it mean?
So I think if you look at, there's been a lot of talk about the bubble. We've heard SaaS apocalypse. We've heard all of these terms, and they've buffeted the markets over the last few months. When we look at it strategically, we're building out into demand that's there today. If you characterize it as a comparison against the AI bubble against the internet bubble of the late 90s, we were building out back then into demand that was coming. What we're doing now, and names like CoreWeave and Nebius and Lambda Labs and OVH and those guys, plus the big hyperscalers, are building out into demand that is in the market now. There's no such thing as a dark GPU, given the supply chain.
Right.
It's been demand that's there today.
Let's talk about one of the tables you had that really caught my attention are the stages, right? The implementation versus estimated future maturity. And I just look at mass deployment within 12 to 24 months. That's right over that's on the horizon. We get the sense that, hey, this is the first quarter, and we think about it that way, and it'll play out over the next several years. But this is a bang situation right now.
Yeah, we're seeing this, what we're calling execution gap, looking at the data that you've got on the screen. We're still seeing this build out, but there's still question marks for many around the ROI and return on investment case for this massive AI capex. Jensen talks about it as $1 trillion opportunity. We've seen the hyperscalers looking to plan and invest over 600 million of capex. What we're still needing to see is that return on investment for enterprises.
Does it have to come quickly? I mean, it seems like eventually it will happen no matter what. I guess the question is, particularly for investors, is it justified near term?
So, as I say, we're not seeing any dark GPUs.
Right.
Everything that comes on stream is instantly being used. AI is infused across the SaaS portfolio. Every vendor that I'm getting briefings from is deploying AI at scale and seeing rampant demand.
One part of your table that really caught my attention was this sort of maturity level, because we've got current infrastructure, and we know that the AWS and Azure and these big names, the specialized infrastructure workloads, the neo clouds, right? And a lot of folks, I've had people on. We've talked about Iron, Cypher, Nebius. These are the stocks that people want to own, although they are extraordinarily volatile. Is that how we should be looking at it? Because even your schematics shows that these are still earlier stages than the other names.
So you've obviously got the hyperscalers, that's the AWS, that's the Microsoft, that's the Google, that's the Oracle. I'd put in that category as well. But then there's a whole class of what people are calling these neo cloud providers. We just saw CoreWeave make its growth to get to 5 billion, making them the fastest growing ever cloud provider. This place is this part of the market is exploding. That's names like Nebius, that's names like OVH, that's names like CoreWeave and Iron, as you mentioned. Explosive growth.
One thing that caught my attention, it seemed like you had a really optimistic view of Oracle and this thing you're calling, or it's called data gravity. Now, Oracle has come under a lot of pressure. The stock popped, but it's pulled back, a lot of question marks. But you say no. People, what you're talking about, people seem to be missing.
So for me, Oracle's got that enterprise data. They've been in this database business since 1977. There's got a huge deployment of infrastructure, but they're also putting their servers and their databases into the other cloud providers. And why are they doing that? Why is AWS, Google, Microsoft allowing people to put their competing infrastructure in their platforms? It's data and that data gravity.
All right. I want some news broke today that you and I were talking about just as you walked in studio. IBM and ARM, this is, I think, the second big news announcement for ARM this week, or certainly in the last week.
Yeah, so IBM and ARM inked a deal, broke this morning. This is around them collaborating on semiconductors. The mainframe business of IBM is still a huge profit driver. We saw that company post 10% growth last quarter, still delivering core infrastructure. Being able to bring ARM's chip architecture close to the mainframe to be able to bring more software, great news for IBM.
Before I let you go, I want to ask you about the big debate question mark. Last week you had Google comes out with this algorithm, Turbo Quant. Memory was unstoppable. These names, whether the Korean names or SanDisk, Micron here, all of a sudden they were stoppable. Today a new ETF is out named DRAM, which I think is pretty interesting so we can kind of follow it. But just your thought and the memory story, is it still intact? Should we worry about some algorithm coming out of left field and destroying that value proposition?
So the way I look at this, the memory space is notoriously cyclical. For people looking at this, there's a huge build-out phase. They bring on fabrication plants to service demand, then demand tails. I think if I was long-term, and this is not investment advice, we just look at the core fundamentals, you've got to be looking at either you're in and out of the market short-term, or if you're making long-term decisions. I think we're at the top of that cycle from a memory price point. So if you're looking at long-term, I think I'd be a bit more cautious. Do your research, look at the cyclical nature of this market.
Right, good stuff. Thanks. Really appreciate it, Stephen.